Today, we are going to be covering millionaire traders, and this is how everyday people, just like you, are beating Wall Street at its own game. Now, just to make this even more fun, we are going to be playing Big Money Bingo. So if you're ready to learn how everyday people are beating Wall Street at their own game and becoming millionaire traders, and we're going to give away some money in the meantime for Big Money Bingo, then you're in the right place. So let's get to it.
Traders and how everyday people are beating Wall Street at its own game. If you find value, please hit the like button and consider subscribing. Unlike other millionaire traders, the 12 traders covered in this book are not backed by huge hedge funds, but
I wonder if this is going to be the turtle traders. That was kind of the whole deal, the whole premise of taking regular people from all kinds of backgrounds and turning them into basically overnight millionaires by teaching them how to trade. Curious.
by their own funds, some with as little as $1,000. Each of the traders have a quite different trading style, some even conflicting with each other, proving there are many paths to success. There are, however, commonalities with each of them. They are disciplined, they stick with their strategy.
Oh, I saw that right off the back. Disciplined and consistency. There we go. We already got B4. Hey, listen, as we go through, and if you see one of these on the board, be sure you put it in the chat so I don't miss it. David says, you know what? These are the outlier traders. For sure, David. Exactly.
And they always cut their losses.
No, cut your losses. We're going to fill this. This is going to be a blackout day. I can feel it coming. Let's go.
The other trait they all had in common was that none of them were successful straight away, many of them blowing up at least one trading account before eventually mastering their craft.
Now, as you guys know, I blew up my account twice before really finding success. It sucks to blow up your account, but it's also kind of a rite of passage, right? It's a lot easier to blow up an account when it's small than an account when it's big. In fact, I heard this little phrase one time. I think it's super funny, right? What's the fastest way to make to become a millionaire in the market? What's the fastest way to become a millionaire in the market? Start out as a billionaire. Yeah, because people, especially when they have a big bankroll, get really careless. So that's why I say, actually, if you want to start trading, you should start with this low value as possible and then build it up, right? Scale into your account versus basically watching your account fly out the window. And the reason, the psychology behind it is, let's say if you started with $1 million, right? And you lost your first handful of trades. You're like, meh, no big deal. I got so much money left. It's not a thing, right? And then you continue to lose more. And you're like, well, I still got tons of money. I can make it up later. And then you get to maybe half of that. And you're like, oh, that sucks. But I still got, 500,000 versus starting with 5,000. Let's say you start with 5,000. You learn, you grow, you adapt. You might lose that $5,000 up front. And that's okay. That's okay. It sucks, but it's okay. It happened to Chris. Okay. Twice. Now, when you are working on improving your skills, you can then go from that 5,000 and maybe start depositing weekly, right? Instead of depositing into a savings account, maybe deposit into an investing account. That's up to you. I'm not going to tell you what to do. But then you grow that skill over time. And because you started with an amount that you can learn with rather than an amount you can blow, two different points, right? You're both starting with money, but one of them is, I'm okay with losing money. The other one is, okay, I'm going to use this as a tool to help me learn and grow, right? This is exactly what happens to lottery winners. They achieve all this money, but they don't know what to do with it. And then what happens? They blow it, right? Versus somebody who has grown wealth from nothing, has learned how to manage that wealth all the way up, and they don't blow it, right? They understand how to use the money to work for them. Now, it also happens with generations, right? The Vanderbilts, I think within 3 generations, all their money was gone, right? Dude was like a multi-billionaire within 3 generations because of the inherited wealth. They didn't understand how to keep that wealth. It was gone, right? We don't want that to happen to you in trading. We want you to start with an appropriate amount that you can learn to trade with and grow that, not start with a huge amount and just watch it disappear, right? Just a little off topic, but maybe it fits this here.
Persistence was an obvious common denominator. Let us look at some of these millionaire traders individually to see what we can learn. Dana Dan Allen, known as the man who buys crashes. From the age of 9,
Oh, yikes. Okay.
Dan would read the Wall Street Journal, and by 21 he opened his own commodity trading account. Dan's approach was to look for deep value, making trades when others were running for the exits, a strategy not for the faint-hearted. He started with a $3,000 account.
But let's pull up TradingView, because I bet a lot of people would say AMD, formerly known as the Advanced Money Destroyer, was deep value at a recent point, right? I see no problem. And you've heard me say before, right? Don't buy stocks as they're crashing down, but buy stocks as they're crashing up. AMD is such a great example of don't buy it on this side, but buy it on that side. Now, how do you know when it's crashing up versus crashing down? It's really not that hard. Super not. Put 3 moving averages on your charts. That's it. The 10 period EMA, the 20 period EMA, and the 50 period EMA. And you can see right here, when the 10 is over the 20 and price is over the 50, that is a bullish trend. Now, not every time that happens will it look like this, right? There are times where that exact thing happened right here and it came back down. So you might make a buck or lose a buck every once in a while, but you will absolutely, hands down, mathematically proven so, be on the side of the trend as it's going if you take that risk. But understand that sometimes it turns around on you, and other times it can go up 60% in just a couple weeks, right? So maybe his point is buying it while it's crashing up after it's done crashing down. We'll see.
And within 6 months, whilst still at college, he lost it all. Eventually, in 1989, he managed to turn a $2,000 account into $40,000 within 6 months, using options against the price of copper, a speculative
Well, there we go, right? That leverage returns that we talk about.
method which paid handsomely. When asked why he stayed in the trade so long when he could have cashed out earlier, he said, "Technical analysis. I was following a chart on it and it still looked healthy, and so I held on to it until it started losing momentum."
Huh. Man. Isn't that weird? Isn't that weird, right? You go through your life, everybody telling you you need to trade, invest based on the incredible story of a trade, right? This company is such a great buy, right? The CEO is going to get paid these huge bonuses once the stock price gets to this level. This I love the stock, I love their products, right? But at the end of the day, they're only going to get paid when the price goes up, which means that profits will follow price, not the other way around, right? Price will not follow profits. I don't know, maybe I'm talking out my backside here, but I feel like the only time you're going to get paid as price is going up. It ain't going to happen elsewise. It's just not. And the only way that you can tell a price is going up is by looking at the price. Right? You can't look at the fundamentals of a company that come out 4 times a year and say, yep, here we go to the moon, because it can go down for months, years, before finally hitting that bottom and starting to turn back up. Mike says story equals cute, but price equals pays. Yeah. I didn't say it, Deep Thought. You said it. I'm not allowed to say that. I'm not allowed to say it. Christopher said #outlier, though. Profits over price. All right. Now I'm seeing a lot of people talking about I3, follow your plan. He didn't say that. He didn't say that. I4, let's see, trade what you see. I'll give you that one. I will give you that one. I will definitely give you trade what you see. VacLav. VacLav's a rock star, by the way. Raul says G3, let winners run. Did he say let winners run? Bull Butter says I4, trade what you see. Okay, I got you that one. Brad says G2. G2, he did say momentum. I did hear him say momentum. You're actually right on that one. Boom. Let's keep going.
A similar selling rule to my own, any meaningful loss of momentum, and I look to close a position. Dan said his best trade was a company called Patriot Scientific. He bought during January 2006 on the basis that the company had no debt, piles of cash, and good profits. The trade became a 26-bagger a few months later. Although Dan doesn't...
Right, and dude's only getting paid when the price is going up. The only time he's getting paid is when price is going up. He can hold it for months while nothing is happening, and then the trend changed right here, and then he's getting paid.
Refer to it, I see another element from this trade which is akin to my strategy, a weekly breakout on increasing volume.
Oh, he said breakout. He said breakout. Now, I saw Dana said, he did say follow your plan. I will finally give you that, Dana. Fine. But I know he said breakout too. Breakout right there. Ooh, it's going to be a big, big day for big money bingo winners.
Coupled with positive fundamentals, this is a solid approach. To sum up Dan's strategy, he recognizes that stocks generally have an upward bias over the longer term, referring to the US stock market, which has averaged 7% over the last 200 years. He therefore looks to buy the drawdowns within this longer-term uptrend, and only with stocks that have no debt. He offers some words of wisdom when he says, "I think my number one trading rule is to not worry about being right, just focus on making money and just deal with being wrong. The purpose of trading is not being right, the purpose is to make money." Next, we have Rob Booker. Rob was a former
I've seen this dude before. Where have I seen this guy before? I don't know him personally, but I know his face. Tell me in the chat where you've seen him before.
lawyer before turning into a full-time trader. He describes himself as a backtester first and a trader second, suggesting, if I can't prove that a system works from my testing, then I have no business trading it with real money.
Ooh, that's good. That's really good. In fact, that's what I talk about all the time, right? Is if you are ready to start trading, first, backtest your stuff, right? Come up with a plan, any plan. It doesn't matter what plan you come up with. Come up with the plan. Then run that back over time to see if that plan is actually profitable or if it's just a thought, just an idea. Now, that plan has to have rules around it, right? If you aren't making a plan with rules, you're probably just following some random guy on the internet. I wouldn't encourage you to do that. Come up with a set of rules that you can follow and then actually track, has this worked previously in the past? Now, after you've done that, you should have a series of data, right? Take that data and drop it into a Monte Carlo simulator. All you got to do is Google up free Monte Carlo simulator, even go to ChatGPT, give me a Monte Carlo simulator. You're going to put in your average win, your average loss, and your win rate. It's going to calculate your best case, average case, and worst case outcome. If your worst case outcome shows that you will be wildly profitable, only at that point start trading. Let me repeat that. If your worst case outcome shows you will be wildly profitable, that is when you can start trading, because you have created something, and I'm not going to tell you what that is. You need to figure that out for yourself. You have created something that is rules-based and has extremely high positive expectancy. Now, once you have achieved super high positive expectancy, start with one share. One share. Not one contract, one share. Get used to the feeling of being in the market, because being in the market is way different than paper trading, right? You could actually skip paper trading and go straight to being in the market if you're just trading one share. After you've gotten used to that feeling of, okay, that's what it feels like to win, that's what it feels like to lose, then you can start sizing up, right? Figure out what position size works best for you. I personally say no more than 5% risk, and then start building up to that point. But you need to actually get used to losing in the market. I know it sounds crazy. Get used to losing in the market before you actually put on real money. And one trade is a great way to get used to feeling what it is to lose in the market.
After thousands of hours backtesting, Rob applied his strategy to the foreign exchange markets, initially with a trading account of just $2,500. Rob says he made a lot of mistakes, in particular making too many trades and risking too much on each trade. He would risk between 5 and 10% of equity per trade, but now understands he should trade with no more than 1% of equity risk per position. He understood that regardless of entry or exit points, trading is a game of survivability, and if you can survive in the game for long enough with a statistical edge, you will win the game. Rob's favored time frame for the Forex market is the 1-hour chart, and he aims to achieve a 100 pip profit each week. In theory, he looks for short-term trend breakouts, often adding to positions going in his favor and cutting short positions going against him. Rob makes the reference possum trading and says it should always be avoided. In essence, he says if a trade turns bad, do not just bury your head in the sand and hope it turns around. Trade defensively and exit the trade.
Dude, does this not sound like what, and I tell you this all the time, right? The principles are timeless. The principles work across everything. Everything. Dudes talking Forex, right? The principles are timeless. O2, add to winners. I don't think he said add to winners. King Arthur says G5. Reduce risk. I don't remember him saying G5. A lot of people are saying O2, O4. Let's see. O2, add to winners. Did he say add to winners? Did I miss that part? Maybe I missed that part. O4, exit signal. Manny says O4. All right. Dana and Manny must be right. I'm going to give you all that. I'm going to give you all exit signal here. Oh, yeah. If you get your exit signal, you have to take it, right? Don't put your head in the sand. Okay.
Along with his defensive trading style, Rob's mantra is simply backtest, backtest, backtest. I
agree with that so much.
One of the books Rob highly recommends for further reading is Reminiscences of a Stock Operator.
Oh, that's a great book. I have the book right here. Reminiscences of a Stock Operator is supposed to be the fictional account of a guy trading in 1920s or so. However, people have also said that it's most likely an account, a biography of Jesse Livermore, supposedly one of the greatest traders of all time. So this is actually a really great book. I would definitely highly recommend picking that up.
By Jesse Livermore. Next we have Chuck Hayes. Originally known as being the coolest guy in the room, although that soon changed. Now he's the coolest man in his own room by himself. The 56-year-old was sentenced to 10 years in prison for fraud, duping investors out of $22 million to feed his pyramid scheme and luxury lifestyle. Clearly,
Ooh, busted.
the editors of this book were also blindsided when he said he specialized in mini stock futures. The lesson here is to educate yourself and not to hand over your hard-earned cash for someone else to invest. Swiftly moving on, this time to a rags to riches trader, Hussein Haneke. South African Hussein took 7 months to save up $1,000 prior to entering the foreign exchange markets. He aims to achieve a 10 pip per day profit, which now amounts to him earning $500 per day. Hussein uses a 30-minute chart for his technical analysis. Plotting a 5-period moving average with a 13-period moving average, he looks for the crossover for the buy or sell signal. One of the key lessons he learned during the early days was to avoid trading during periods of news. He identified that regardless of the technical structure of a chart, any meaningful news would make the structure or moving averages worthless.
Oh, yeah. Okay, so he said moving average. I'll give you moving average. But especially right now with tariffs, like legitimately, as funny as we make this, right, with the whole golden toilet tweet stuff that's going on, it really sucks, right? You're in a trade, everything's working great, and the next thing you know, Trump and his thumbs just like mess up everything. God, it's so frustrating. So frustrating. Or we've been on the right side of a couple of those moves that have been amazing, tremendous, right? You can't control when that kind of stuff has happened. In fact, there's always a reason not to trade. With that being said, if you are a professional fund manager, and you are a professional fund manager, I want you to understand. I want you to go to your LinkedIn resume, update it right now. You're a professional fund manager. You need to treat this as a professional fund manager. We're always looking for opportunities, right? Of course, we always look to reduce risk as much as we possibly can, but that risk can actually result in incredibly high returns, which has happened to me this year. The objective here is to follow your plan. Regardless of what's going to happen, as long as you follow your plan, you followed your plan. Outside forces will always be there. They will always be there. If you're looking for an excuse to never take a trade, you will find it every single day of the year, and then you'll never trade. Or you can say, I'm going to follow my plan regardless of what happens, no matter what. My plan has a edge. We talked about that earlier, and I'm going to follow it. And sometimes it sucks. Yeah, no toilet tweets. No toilet tweets.
He therefore avoids trading during 10:30 a.m. to 2:30 p.m. A key tip from Hussein is to triple a demo account prior to going live with real funds.
It's actually a really brilliant idea, right? Use paper trading, and once you've tripled your paper trading account, then you can actually start trading with real money. I like that idea. You can skip it if you can prove that you can be profitable. Like I mentioned earlier, right? You use your Monte Carlo analysis, and then you can start with just one share. Dude, if you can do it with one share, you're going to skip a few months of trading like this. But it's actually a really great idea.
Using regular practice and self-reflection to gain consistency of a particular trading methodology. Next up, Frankie Law. Frankie managed to turn 200,000 Hong Kong dollars into 6 million. It took him 20 years of trading experience to perfect his style, and he started to make serious.
Okay. I want to give you some perspective. All right, I'm going to give you some perspective here. There's a lot of people on social media that tell you if you haven't turned your 200,000 into 6 million by the end of the year, you're not a very good trader. In fact, earlier this year, I saw this YouTube comment. It was really funny. I had pushed up as high as 59% for the year. I hit a losing streak. Now I'm at 24% for the year. 24% for the year is still outstanding, by the way. Not where I want to be, but it's still outstanding for most people. This person's comment was, you're only at 56% for the year. It's really not that much. You probably shouldn't be telling people about that. That is how social media treats trading. Social media treats trading as if you walk in, you pull the arm on the slot machine, and you turn 200,000 into 6 million in a couple days. Do not even attempt to do that. Dude took 20 years to do that. That's an appropriate amount of gains. Over 20 years, that makes a lot of sense to me. But it doesn't make sense if you are following a lot of people on the internet, right? So don't get caught up in that hype, in that excitement, in the expectation. You're going to crash out. It's just going to happen. Or you can say, I'm in this for the long term. And if it takes me 20 years, it takes me 20 years, right? Following the plans.
Serious money from 1998 onwards. Once again, Frankie trades the Forex markets, preferring the Swiss franc pairs due to the improved volatility, with the London and US market open offering the most activity. He uses the daily chart to look for the general direction of a trend, and then drills down into the 1 minute
I feel like that means he's following the trend. Definitely following the trend.
charts to time his entry and exits. With these small 1 minute fluctuations, Frankie can use a 20-to-1 leverage, a level not recommended for traders with little experience. Frankie said his best trade was in August 2005, when he traded the US dollar Swiss franc. He noticed price was nearing a key support level, so when he saw a short time frame breakout to the upside, he entered a long position for the sum of $7 million. He held for 8 days and exited for a 40% gain. It was interesting to hear Frankie say he only generally uses the MACD indicator to help his trading decisions, preferring to keep the charts as clean as possible. And when asked if he had a tip for trading, he said, yes, stops. The number one rule I have is to use stops.
Use stops. So that's something when I worked with Larry Hite, he was the first $1 billion hedge fund manager and one of the market wizards and somebody I worked directly with. That was what he drilled in my head for 2 hours, was basically use a stop, use a stop, use a stop, get used to losing, get used to losing, get used to losing. It's just a fact, right? Get used to losing, because if you can't get used to losing, you'll never know what to do. You'll never know what to do. Mike even says, I had a hard time paper trading. I just didn't feel like I was learning the most important lessons. I lose 20 bucks of real money and feel it very strongly, or I lose $4,000 in paper and feel nothing. And that's what I mean, dude, right? Putting in the one share and just using that for a minute, getting used to that is a big step up from, oh, this is a video game. It has no consequences, right? That 20 bucks is worth every moment that you're putting in the market to learn from that, for sure.
He was also against averaging down on any position moving in the wrong.
Yeah. Don't buy the dip. I'll give you don't buy the dip on that one. Do not ever buy the dip. Do not ever average down.
Wrong direction. 2 rules I completely agree with for any type of breakout trading. Next, we have Tyrone Ball. Tyrone trades NASDAQ stocks almost exclusively, and is referred to by the editors as one of the most consistent and profitable retail traders they have ever interviewed. MBA graduate Tyrone started out as an insurance broker, and later cashed in on a property renovation, netting him $75,000. His intentions were clear. This would be his trading capital for a new career. He soon moved to Chicago.
It's funny. I have some similarities with Tyrone. I also had an MBA. I cashed in an old 401k, kind of like he was talking about cashing in an old house.
They have ever interviewed. MBA graduate Tyrone started out as an insurance broker.
I also worked at 2 different insurance companies. That's interesting.
And later cashed in on a property renovation, netting him $75,000. His intentions were clear. This would be his trading capital for a new career. He soon moved to Chicago and began working for a trading firm in 1999, where he would stay for 2 years. Primarily a day trader, Tyrone lost almost $20,000 in the first 4 months with the firm. His luck, however, would soon turn, and by February 2000, through numerous biotech holdings, he would soon be sat on equity to the region of $120,000. Another reality check would, however, soon arrive. And
by the way, again, started with 75, ended at, what was that, 150 or so, right? He doubled his account, but he didn't do it overnight. He didn't do it in a couple months, right? Most people on the internet do not understand the concept of allowing your trades to work, allowing your trades to play. They only see the outcome. They only see, oh, you know what? Dude's made $1 million. He's so smart. He must have done it right away, right? LeBron didn't turn into LeBron by playing one basketball game, by playing one season. Dude has spent decades perfecting his craft. Yet people want to come into social media and talk about how smart they are, how much genius they are, how much of a genius they are, and how quickly they can grow their profits when it's not realistic. I think a lot of people get absolutely monkey hammered in their expectations because they think that it's meant to be fast, easy money. And truthfully, it's not. Truthfully, it's not.
And this time with another how not to do it lesson of averaging down. Speaking about some of the stocks, he said, if they were at $150 and they came down to $20 or so, I thought, wow, how much lower can they really go? And I found out.
Oh, that's a good one, right? That's a great one. And let's go to AMD, the Advanced Money Destroyer, right? If it came down from $200 down to $90, how much lower could it go, right? Dude exactly said from something like that, how much lower can they go? They can go a lot lower. That's why you never buy the dip, because you don't know where that's going to stop. You don't know where this is going to stop, right? I guarantee you there were people who were buying it here at 165 in October last year on AMD saying this is the end of the dip. It's over, right? It's going to go back up. Those people are just now to break even. Just now to break even. Just now. Right? This is July, nearly a year later to get back to break even. And then there were people buying it all the way down who had similar experiences. They had to wait weeks or months to get back to break even, which you don't have to do that. Throw 3 moving averages on your chart and just trade in the direction of the trend.
Needless to say, Tyrone learnt from his mistakes and adapted his strategy accordingly. Let's see what his approach now entails. Tyrone suggests he is now a momentum trader and does not try to
Wait, we did momentum earlier. Yeah, okay.
Fight the market. There is no more averaging down, and he will just take a loss at the change of momentum and move on to the next trade. He has a 3-screen setup, one which filters anywhere up to 40 stocks per day, another looking at the individual stocks, looking for volume, volatility, chart patterns, and clues of momentum. He never tries to predict, rather reacts to
he says literally don't predict. Don't predict. Boom.
Confirmation. To give you an idea of time frame, Tyrone says his average holding time is 7 minutes, and he has glued.
Oh. Okay, I can't live like that. I'll have too many ulcers if I try to do 7 minutes. That's crazy.
To the screen for 7 hours a day. He has a winning day 80% of the time and averages around a $1,000 profit per day. I particularly like his analogy regarding the game of roulette and how its principle applies to trading. The house, depending on how many zeros were on the wheel, could have an edge of around 2.7%, meaning over a large volume of spins, the house would expect to pay out for.
Oh, Charlotte asked a great question. How many screens do you have? I have 2. I have 2. I don't want more than 2. I have one over here where you're seeing all this going on, and then I have another one on the other side, which is where I run all the streams and I put all my my accounts over there, because I'm not going to be one of those people where you get to see all of my account information. I'm not comfortable with that in the least, and I don't know why anybody does personally. But that's the way I do it. I do 2 screens. That's it. I don't need more than that.
47% of the time, providing a win probability of 53%. Using the same principle for a trader, if the volume of trades are large enough, we would expect the edge, or improved probability of a winning trade, to materialize. Using the same stats in our trading simulator with a 53% win probability.
By the way, this was my very first Monte Carlo simulator. I purchased it from this channel. And what I'm talking about as far as like Monte Carlo simulators right here, you look for the worst case outcome and how can you do in that worst case outcome.
An even money return of $500 per trade and volume of 1,000 trades, we can see the average return would be near $27,000.
But hear me out. If you win 500 and lose 500, but you have a 53% win rate, your worst case outcome in this case is still positive $10,000. So this is an amazing setup here.
We can also see the variation in equity profiles over the 1,000 trades, with the worst losing streak of 10 and the best winning streak of 14. It's clear to see Tyrone applies the same principle, using a small edge over a huge volume of trades. His words of wisdom are, don't hold losers, keep a positive mindset, think like a winner, go to the market every day and take out some money. Be patient, be disciplined, be passionate. These are a handful of traders covered in the book, and rather than make the video too long, we summarize their
Oh man, I want to make the video too long. I like this.
Philosophies here. First, know yourself. Know your trade. Your personality needs to be in sync with the methodology you apply. Revenge is never sweet. Making impulsive, irrational decisions can lead to blowing up your trading account. Concentrate on making good trades over and over again. Backtest all you can and use a demo account to prove.
Okay, fine. I'll give you O1. I'll also give you N1. How's that sound?
If you are able to trade it. Doctors and lawyers spend countless hours practicing their craft. There is no reason for you not to either. Averaging down is for losers and can make the difference between success and failure. Tops and bottoms are only evident in hindsight. A top or a bottom only happens once, whereas a trend is continuous in between. Almost all the traders go with the trend and do not try to second guess the turning points.
Huh. Go with the trend. Sounds very familiar.
Finally, protect your capital, protect yourself.
Oh, I'm going to give you reduce risk on that one. Protect your capital, protect yourself. Reduce risk for sure. Oh no. Do we see any bingos yet? It's getting so close to the end of the video. What are we going to do?
Always think defensively first, and always use a stop.
Oh, I'll give you N5. Yeah. Backtesting is also journaling. I will give you that one. So that means we have one bingo on the board. Maybe we'll get lucky and get a second one real quick.
In summary, the book has over 400 pages and is worth a read to get some real insight into the thoughts of some serious traders. Thanks for watching. And as always, please...
All right, Steve, fine. I'll give you G4. You got to wait for your entry signals. Absolutely. Now, I'll also give you weight in cash. Because if he didn't clarify this, but the only thing that they're doing is either, right, this is binary, in trade, out of trade, waiting in cash, putting cash to work, right? I'll give you that. I don't remember him saying anything about a market cycle. I don't remember that. When Mike G says he said market cycle, then Chris says he didn't say market cycle. Therefore, I see what you're doing there. He 100% said add to winners. Did he? Did he though? All right, fine. I'll give you add to winners. Oh, snap. We got bingos everywhere. We got 1, 2, 3 bingos. 3 bingos. I guess that means we got 3 winners to pick today, right? The only way you will be a winner is if you put #outlier in the chat. Have you put #outlier in the chat? Have you done that? Right? If you have not, you will not be a winner. I'll give you 10 more seconds to do that. Give away money. It's not just in our trading. Yeah. I get it. VGuard, you got to do 1 hashtag. 2 hashtags is too many. All right. I'm seeing lots of #outlier in the chat. If you haven't already put #outlier in the chat, you got to do it real quick because we just got a triple bingo and we're going to draw the first winner right now. Here we go. Who's going to be the first winner? By the way, if it pops up on me, I saw my face pop up there. I'm not going to count that, of course. I get to win by hanging out with you guys. Moneybags Ashley. I just saw that, by the way. I just saw Moneybags Ashley type that in. Right there. Moneybags Ashley at 10:20, literally less than a minute ago. Way to go. Congratulations, Moneybag Ashley. I need to take some screenshots and send this over to April so I don't forget. Hold tight. Congratulations to you, Miss Moneybags. Are you familiar with Scrooge? Mr. McDuck. All right, so Moneybags Ashley is our first winner. And let's do the second winner here. Draw again. Who's going to be the second winner? Mike is the second winner. Mike, I'm going to do my best here. Mike Cowman Tack. Mike Cowman Tack. How was that? I was probably way off, but I'm trying, my friend. Congratulations to you, Mike. All right, outstanding. That's 2. Let's go and find our third one. Our third winner of the day, a little $10 Amazon gift card just for playing bingo, just for having a little bit of fun. Here we go. Hey, Cappy Girl, she won last week. Happy to know her dog treat's on the way. Congratulations, Cappy Girl. Bert, congratulations to you. So we got 3 winners on the board today. We got Mike, we got Bert, and we got Moneybags Ashley. Congratulations to all 3 of you. The way to claim your prize is send us an email over at support@outlier.com. Let us know what your email address is so we can shoot over that $10 Amazon gift card. And congratulations to all of our winners. Congratulations to you for watching. Because you are watching this, you are improving your trading skills. And by improving your trading skills, you are setting yourself up to create generational wealth in the process. So you really should be congratulating yourself. Even though you didn't win today, you're always going to win by making yourself better. Now, we're going to jump right over into our trading room live stream. So go ahead and close this link, move on over to the other link, and I'll see you right over there. We'll talk soon.